From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we go into the trade war. I give you some of my opinions, which I hardly ever do on this show, from a political standpoint at least, on why we should be doing this particular set of tariffs. Now, whether or not we should tariff the exact thing that is getting tariffed is up for debate, but the principle behind these tariffs is very clear from an American first perspective. But whether you agree with them or not, they will certainly pose some impact on your retirement accounts as well as your bank account. We go into a little bit of that on the show. We go into some Social Security changes, and I briefly announced Social Security changes that I have done extensive shows on in episodes past. If you are not familiar with those, go back and look at certain shows here on the Retirement Matters Podcast, where we even go into a case study of a Social Security recipient and how they will be impacted by this most recent Social Security Fairness Act that was passed in 2025 at the very beginning of the year by President Joe Biden. We then moved to a discussion that I had with a client, and in my opinion, this is probably one of the most impactful recommendations that I've made with a client in a long time, because it was a lifelong dream of hers to be able to retire close to her son. When her son moved to a state which will be disclosed in the show, she was somewhat devastated, but now is in a position where she can make that dream come true, and had fears that we needed to help settle for her to make the transition. This is a show titled Trade Wars, Social Security, and the Relativity of Risk, simply because the amount of risk an individual should be taking in their portfolio is solely dependent upon where they are in retirement. If you are close to retirement, your amount of risk should be a whole lot less than if you are far away. There's also the other side of this equation, which says that if you're deep into retirement, you might be able to take a little bit more risk than someone who is just entering into said retirement. So again, the relativity of risk is it depends on where you are. In other words, it is all relative. I hope you enjoy the show. And without further ado, this is this week's episode of the Retirement Matters Podcast. Good morning to you. I hope you're doing well and you are ready to start discussing all things retirement matters. We've got a full show on the docket this morning, and I hope we can get through it all. We're going to discuss the trade war and all the tariffs that are going on, Social Security updates that have recently came out, the crypto scams that I'm starting to see enter into the marketplace. You got to be aware of those, and we're going to talk to you about a client discussion that I had recently with a retiree who's just looking to spend a little bit more time with her son and her daughter-in-law in Portland, Oregon. We are going to be discussing all of these things. You're going to find something that you will be able to use this week, I'm sure. And we're going to start with the pause for positivity. This pause for positivity comes to us from a story that I heard Steve Harvey tell a while back. So if you've heard this before, it's likely because you heard Steve Harvey tell it. I'm going to tell it here, an abbreviated version, and it's called The Story of the Flea. It goes like this. A flea has 36 inches worth of vertical. It's got the highest vertical of any insect in the insect world, 36 inches high. Most human beings can't get that high. This flea that lives on the dog or a cat in the hair of these, it's a microscopic insect, can jump 36 inches high. But if you take that insect, that 36-inch high jumping insect, and you put it in a jar, and you put the lid on a jar, you will see that flea begin to think, okay, I've got a 36-inch vertical. I'm getting out of here. He'll jump, but he'll hit his head on the top of the jar, and he'll be knocked down. He'll jump again and hit his head on the top of the jar and gets knocked down. He does this over and over and over until finally this flea makes an adjustment. And he begins to jump just high enough to where his head is not hitting the jar and he's not being knocked down. If you take a bunch of other fleas and you put them in the same jar, the same thing will happen with those fleas. They will begin to jump until they see that they're getting knocked down, and quickly they will learn that if they'll just make an adjustment, they can keep jumping without being knocked down. They got a 36-inch vertical, and every one of these fleas, within a matter of just a few minutes, are jumping just high enough to get to the top, but never wanting to get knocked down. They're allowing the environment to determine their potential. You see those fleas have babies. Those fleas will be born with the potential to jump 36 inches, yet they will never jump high enough to even hit their head on the top because they've never seen mommy and daddy do it. They've always seen mommy and daddy jump just high enough to get there, but never high enough to get knocked back down. This is a powerful story, and it talks about your potential and allowing your potential to be limited by your environment. So the pause for positivity this morning is to make sure that you are not allowing your environment to limit your potential. You will never see your 36-inch vertical come back until you take the lid off of the jar. Your potential is limited only by the environment you allow yourself to be a part of. Reminds me of another story about the mighty oak tree. If you take the seed of a giant mighty oak tree and you plant it in the pot of a let's say a 2-foot diameter pot, that mighty oak seed will never grow to be a mighty oak tree because it's limited by the confines of its environment. There is nothing wrong with the seed. It is the environment that has stifled its growth. You see, there's nothing wrong with you. You are the seed that God made. He made you in His likeness. He made you in His image. And He is mighty. He is big. He is unlimited in His ability. You see, if we allow the environment we find ourselves in to limit the seed will never reach its potential. You have been given a gift. And even more if we take this to the next generation. You see, we talk to a lot of retirees who have grandchildren, and their number one goal is to leave this world better than they found them. That's who we find ourselves here at RDS Wealth working with, because that is our mission. That is our goals. And when our goals and missions align with our clients, we typically have a long-term partnership with them, helping them guide their way through retirement, leaving this world in a better place, planting seeds that turn into trees, generating shade for generations that they will never see. And if we're not careful, we will teach our children and our grandchildren ways that are limiting rather than ways that are unlimited. We will bring them into this world and plant them in an environment of negativity. Or maybe we'll find that we have planted ourselves in an environment of negativity. And just like our Creator, we have the power to change our environment. Sometimes it's just a little bit of positive thought. Sometimes it's a little bit of positive self-talk, not negative self-talk. We see way too many people in this world who talk negatively to themselves. And because of that, they have limited beliefs. Limited self-view, limited self-beliefs will limit your potential. Whether you're the flea or you're the mighty oak, You have an unlimited amount of potential. If you change environments, I want you to take this gift, this seed that you have been given, and I want you to make it as best as it can. It starts today. So here's the challenge this week, whether it's for you, it's your children, or it's your grandchildren, be sure that you are creating the environment necessary for us all to reach our full potential. And just like that, the pause for positivity is over for this week. Take that into the week, and I do believe that we will find ourselves making this world a little bit better one day at a time. We're coming back with some information on the trade war. All of these tariffs, talks of tariffs, what is it going to do for you? What's it going to do for the bottom line of a lot of these companies that you have found your retirement savings invested in? And how will it impact your journey through this retirement? Is it going to be okay? Or is there something you should be doing? Don't go anywhere. We're coming right back with more Retirement Matters after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. We are going to jump into some talk around these trade wars that are taking place between the U.S., China, Mexico, Canada. What is going on exactly is a question that we get a lot of, and we just want to address it here on the radio show. You know, I did a television interview with One America News Network just a couple of days ago about this tariff war and what is going on right now. It all boils down to a trade imbalance. We have a nearly $300 billion trade deficit with China every year. It got to a record high of $418 billion back in 2018. This is a staggering number. It is by far, the number one country that we run a deficit with each and every year, China, a country that has an entirely different opposing worldview. This is a country that is communist at its core. It believes in an entirely different set of government, an entirely different way of running the world. If it were the superpower of choice, it's the second largest economy and growing fast and quickly. And there has been talks recently, as early as just the last few years, of China going into a pact with other communist countries and creating a general world currency that would rival the U.S. dollar. In other words, they are doing everything they can to disrupt our democratic point of view around the world. The People's Republic of China are not good actors when it comes to global politics. Their point of view is totally contrary to ours, and we run a deficit with them on goods and services, some that are existential to our existence. In other words, if they decided to stop producing, stop providing certain things, we could be in jeopardy. You don't have to go far back into the history books to see this in action. Back when COVID hit, pharmaceuticals that we depended on were made in China and imported here. And they put a hold on some of these to the point where we were concerned that some of our pharmaceuticals would not be delivered to people who needed them the most. This is a major threat to America's dominance, to America's worldview, and it is something that Donald Trump, as president, started in his first term, and he is hell-bent on finishing it in his second. Now, what does that mean for us as an American consumer? It means that we should be expecting higher prices. You know, in 2018, when all of this started, where Donald Trump placed major tariffs on imports from China, we were at a record high of $418 billion with a B dollars per year deficit per year. Now we are running under $300 billion. It's still not where it needs to be, but we've cut nearly a quarter of the deficit down. And this is because the tariffs that he placed into motion in 2018 were maintained under the Biden administration. And so thankfully, both administrations have been somewhat serious about attacking this matter. We now see this $300 billion number staring us in the face, and Donald Trump wants to make sure that he finishes the job. What number it is in his mind that he wants to get to, we're not sure. But we are confident that he is wanting China to honor the integrity of our patent system, to honor the integrity of our intellectual property of these businesses that are operating in China. As it stands, China will have a company that comes in to do business with them in the country of China hand over a lot of their intellectual property in order to access our people. China says, you must hand over your designs. You must hand over your patents. You must hand over your information. Let's say it that way. And then they will take that information and they will deploy it out into their slave labor camps. I'm using a little bit of colorful language here, but it's practically slave labor. These people work just so they have a place to live. They work, and it's a place to live supplied by the government. It's communism. They will employ these people for pennies on the dollar to make the goods and then turn around and import it to America so that we purchase them for pennies on the dollar. This is the type of stuff that you're getting on TikTok Shop. This is the type of stuff you're getting on Shein. This is the type of stuff that you're getting in these knockoff Temu type places that we're buying stuff. And granted, I'm guilty of this. But it's the things that are coming to us from China that are knockoffs of companies in America that took the time, expanded the energy, and have the intellectual thought process to build. Once they enter into China's marketplace, those things are duplicated and then sold for way less than they ever could have been in America. And they're sold to Americans. And this is racking up our deficit. This is not good for American businesses. This is not good for American consumers. Although it is cheap only for a period of time. The things that are made cheap. You don't have to go very far to realize that. And every single person that is in business is guilty of this, because why not employ someone to do it for 25 cents an hour when an American worker demands $15 or $25 an hour? So as a business owner, if China is a possibility, it makes a lot of sense for the bottom line. But in the long run, it jeopardizes America's dominance. And I'm sure it's not you, but there are people out there who would say, well, America doesn't need to be so dominant. Why does America need to be number one? And if that is what you are asking, then you need to reposition your thought process around how the world would be without America. I am pro-America through and through. I am proud to be an American. And in my opinion, America should maintain its dominance. Do we have bad actors? Of course we do. Do we have people who are corrupt? Of course we do. And I'm not even here to debate which one of those you believe it is. What I'm here to tell you is that if it had not been for America, this world would be an entirely different place, and it would not be for the good. So in my opinion, we should be protecting American businesses. And what that means for us in this tariff war is that we will likely see higher prices. We will see higher prices for things that we're used to buying on TikTok Shop or Temu or Shein. We will see higher prices for things that are manufactured in China simply because of the tariffs themselves. And we may even see higher prices on goods that have nothing to do with China except for the fact that they get parts from China. Those parts have to be taxed through tariffs because they're coming from China. And Donald Trump's ultimate goal here is to make those companies now start manufacturing those products in America. Whether it's a small component or it's the entire product, if it's manufactured in America, American workers benefit. Now, will that happen in a perfect world? Yes, of course it would. In a real world, it may not. In 2018, when this all started, companies didn't move to America, they moved to Mexico. Our national deficit with Mexico has doubled since 2018, all because of these tariffs that were put into place on China back then. But I'm here to tell you, whether you believe that Donald Trump is the best president in the world or you believe that he's the worst person to ever exist, there is one thing to be said about Donald Trump, and that is that he wants to put America first. And while I may not support every single thing that he's ever done in his life, I fully support the idea that we should be renegotiating our trade deal with China. Until they're willing to play fair and honor our patents and honor our intellectual property, they should not be the number one country we run a deficit with. You can't ask them to go Democratic, of course, but you can certainly ask them to play fair, and that is what is taking place right now in front of our eyes. You should expect higher prices and potentially lower markets for a period of time. It happened in 2018, so let's draw some parallels there. In 2018, we saw the markets take a tumble. They took a tumble for a period of time because of the trade wars, but they quickly rebounded because we realized how great this was going to be for American business. I expect the same here. What does that mean for you specifically? That means that if you are concerned with stock market corrections, maybe you should be sitting down to see how much of a correction you can take inside of your retirement account. Our firm can assist you in doing this. 270-600-PLAN. When we sit down together, we take a look at your accounts and make sure that you're in the right place for your time. If you are 5 years or less from retirement, you should be considering some money on the sidelines for both income and potential buying opportunities. If you have money already on the sidelines, be prepared to snatch up really good stocks at 10, 15, or even 20% discounts. I've got a friend who every time he sees me, he tells me Donald Trump's going to wreck the stock market. And while I do not share his same doomsday concern, I know that we are in for some volatility. And when this volatility comes, be ready. If you need help getting ready, call us, 270-600-PLAN, and we will show you how to do that. Don't go anywhere. We're taking a quick reset. We're coming back with some Social Security updates and a talk that I had with a client about living out their retirement dream and their concerns around the real estate market, why they have not yet acted on that dream. We're coming right back in 30 seconds after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. Let's talk about some Social Security updates. If you're not familiar with the Fairness Act that recently passed, Social Security Fairness Act, this means that if you are a teacher, you're a recipient of a government pension, or your spouse is a teacher, you likely need to be calling our firm, 270-600-PLAN, and getting serious about understanding how this changes your retirement plan. As a teacher or a spouse of a teacher or a recipient of a government pension, you will likely see your Social Security planning change. And if you're not working with an advisor who can assist you in Social Security planning, when to take it, how much it is going to be, when you take it, should we be taking other sources of money from other places to hit your income need? If you're close to retirement and you are not doing that, you need a second set of eyes. 270-600-PLAN. We'd love to be that second set of eyes on your plan for you as someone who specializes in the income phase of retirement planning. There are growth advisors, and there are those who are meant to help you get down that mountain that we call the proverbial retirement mountain, where you have already reached the day of retirement. Now you've got to make sure that you are able to live out the rest of your life and not lose the hard-earned money that you've saved, turning on income when you need it, where you need it, and how you need it, and knowing that that income is there no matter what's going on in the market. We can help you do that. Social Security updates. There was recently an update, I think on the 4th of February, the website updated to give you just a little bit more information on the Fairness Act. Again, if you read through this, SSA.gov, if you read through this and you have questions, call us. We can certainly assist you with your questions. I want to go to a conversation that I had recently with a client who is considering a move to Portland, Oregon. They are very serious about this move. They want so much to go buy a house close to their son and daughter-in-law. And when I was discussing where they were with that plan, and we've already got it baked into the plan, knowing that they need to go ahead and make this purchase, nearly $100,000 is going to be spent on this house in addition to their current house because they owe nothing on it. They're going to sell their house here and eventually go there and buy a house. They begin to talk to me about their fears of buying a house at the highs of the real estate market and then seeing that house tumble in value. And I wanted to talk to them about why they had that fear. Because I told them right now is time to not concern yourself with how many assets you have, but instead how many memories you can make. This lady is 69 years old. She's single, widowed now, looking to go live with her family, her only son, who's 42, his beautiful bride, and their beautiful grandchildren to her. She wants so bad to go out there, but she is concerned that the real estate market is too high. And I asked her, why does it matter? If we're not careful, we'll lose track of what actually matters. If she purchased a house for, say, $400,000 or golly, even $500,000 and had a small mortgage of $600 or $700 a month, she's having an excess amount of income of $3,000 a month. When we begin to put pen and paper together, she realized she could go buy just about any house she wants. She's had her eye on a house that's going to cost around $450,000. And if we need to, we've got room in the plan to pull the additional $150,000 after she sells her house here for around $300,000. But she was concerned that she was going to buy something at a high. At the end of the day, it's not always about making sure that your investments are growing as much as it is about making sure that your memories are made. Life is too short. We are not promised tomorrow. And I am certainly here to help many people make sure they are not buying something at a high and selling it at a low. But when we talk about a real asset like a house, I don't think there's one time where you should be concerning yourself with buying something at a high, especially if you're going to pay cash for it, just because you're afraid that the market might go south on you after you've purchased it. If you had waited for the real estate market to go down over the last 3 to 4 years, knowing that, yes, it's going to happen, it's going to happen, it's going to happen, it never happened. And in the last 3 to 4 years, we've seen some values double. So even if it were cut in half now, it's back to where it was 4 years ago when you said, I'm going to wait. This type of methodology around real estate for a primary residence for this particular client didn't make sense. It may make sense for some. It may make sense for you. But if you are facing decisions about whether or not to do these types of financial moves and you don't have someone to bounce your ideas off of, let's sit down together and see if it's possible. 270-600-PLAN. This particular lady, after our conversation, began to talk about now when she needs to put her house up for sale. rather than should she be buying one in Portland, Oregon. We got her kids involved. We've got her in-laws involved. And even if she sells something here in Kentucky and moves to Portland, Oregon, she's going to have a place to land for a couple of months until she finds the right place there. There's not a single thing about this that makes me believe she should be waiting. And it's all because she had this fear that was not rational for her situation. Now, if you're 20 years old and you're thinking about buying a house for a real estate deal, or maybe you're considering being a real estate investor, and you've never done it before and you're going to have to leverage everything, and maybe there might be a better time to buy. But at 69 years old, thinking about needing to spend the rest of your life with people you care about, close to them, just make it happen. We were able to help her make this happen simply because we put plans together. We're not here to just tell you what stocks to buy, although we do that for you as well. Our objective is to be holistic in nature. We help you navigate retirement decisions. When to take Social Security is certainly one of those, and we help you understand your claiming strategies that are at your disposal with Social Security. We build a plan for paying less in tax over your lifetime. We help you plan for long-term care. And the whole alphabet soup of Medicare planning, don't do that alone. We are here to help. If you're entering into retirement, you need a firm like ours that helps navigate all the twists and turns along the way. There's so much more to it than just what stocks and bonds to buy. And while we certainly help clients protect and grow their assets in retirement, we are here to help you with every other decision that surrounds the retirement journey. We would love to be a second set of eyes for your plan. And to make that happen, simply give us a call, 270-600-PLAN. All right, guys, you've been hearing the music now for a few minutes. And just like that, we are through our show. I want to thank you again for tuning in, just like we do every week. Until we talk again, whether that's in person or it's right here on this same station, always remember, save money, plan well, and live happy in retirement. God bless.
Investment advisory services made available through AE Wealth Management, LLC. AE Wealth Management and RD Smothers Wealth Management are not affiliated companies. Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. RD Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by RD Smothers Wealth Management.